Hi, everyone. I'm Valerie Leonard, founder of EverThrive Financial Group. It's February, and while the Winter Olympic contenders were navigating the ski slopes, investors were navigating some market slopes. I am here to walk you through some of the recent activity and what it may mean for you. For those of you that know us, our mission at EverThrive is right there in our name. We are here to help our clients thrive in all areas and in every season of their lives. And one way we do that is by making sure we're always available for any questions that you may have. So on that note, I'm going to start by answering a question that I know a lot of people are asking right now. You specifically may be wondering about volatility in your investment portfolio since the start of the year. So let's talk about that. So far, overall, year-to-date returns did end up going downhill due to the sell-offs in all major indices. So as you can see on this chart, this is a chart of the S&P 500. Since the beginning of 2022, the S&P 500 has lost 7.22% as of Friday, February 11th's close of business. And then the NASDAQ was down as well, but a lot more. It was down 11.82% as of Friday. But keep in mind that the upward trend in the S&P 500 is still intact. We're in right now a pretty critical area, and the next few days and weeks should reveal whether this market has more downside or whether it will potentially rally from here. So I'm watching this closely on behalf of our clients, and I'm happy to discuss my specific plans for those of you who may want to know more about your own investment accounts. But let's talk more about what's fueling the sell-off. Last week, markets reacted nervously to hotter than expected inflation data and to comments from St. Louis Reserve President James Bullard, who said he'd like to raise interest rates even faster than what the market had been anticipating. Technology and small cap stocks have also been hit particularly hard. But I think most people would agree that technology will continue to be a bright spot in America's future, and small cap stocks continue to be a very important asset class if you want to maintain a diversified portfolio. So this is where looking at your investment time frame is really important. If you're concerned about returns over the next 3 to 6 months, you're likely going to be disappointed. But if you're looking at returns a year or two out, I believe this market still has lots of potential to pay off. Keep in mind, as I mentioned in my last market update, that sell-offs mean reshuffling. For example, from technology to global equities, or from growth to value-oriented investments. And we're starting with our January glass half full optimism that I mentioned last month. So despite this year's market ups and downs, the outlook is still positive overall, and investors should stay the course. We say this because it's the foundation that we're looking at, not just the snow, but the mountain underneath, so to speak. So company earnings were strong in fourth quarter, beating analysts' expectations, and this means that there's a strong economic foundation, and that bodes well for financial markets. Think about your investment future and compare it to an Olympic athlete. Does an Olympic athlete train for a short period of time, or do they spend years perfecting their skills? Of course, the answer is that they keep a long-term perspective, and that's what I'd encourage you to do as well. Also, it may be helpful to note that JP Morgan studied the correlation between rising interest rates and stock market performance. They went back to 1965, and they found that when rates rose but stayed under 4.5% prior to the financial crisis of 2008, the stock market generally rose also. Since the financial crisis, rising interest rate environments that put rates below 3.6% also have generally equated to higher stock market returns as well. So we'll see where interest rates land, but for now, there's a lot of historical evidence that says that we might expect better than expected outcomes, even in a rising interest rate environment. The Federal Reserve has called an emergency meeting for tomorrow, Tuesday, the 15th of February. We're going to see what may come of that, but stay tuned for more. And given the uncertainty of how much or how fast rates will rise for the remainder of this year, it's likely that markets aren't going to calm down until we know more about the Fed's action plan. plans. So stay tuned, expect lots of ups and downs for now, but keep that long-term perspective as best you can. Now, here's another good surprise. The jobs report released on February 1st indicated a much higher than expected non-farm payroll, so 467,000 jobs. The jobs estimate had been reduced due to the Omicron surge, but this variant affected jobs less than predicted. So while jobs in hospitality and entertainment are going to be the slowest to come back, the economy created more than 700,000 new jobs at the end of the fourth quarter, and average hourly earnings were up as well. So while this is great news for the economy, the market did have a mixed reaction. The higher payroll means a higher probability that the Fed will raise rates in both March and May. And since the market reacts to uncertainty, we're likely to continue to see some blips related to this Fed question mark. But still, a strong foundation is there. Some more good news includes business confidence, which remains steady despite the uncertainty at the end of the year regarding the pace of the economic recovery. Since business confidence goes hand in hand with consumer spending, this is also an encouraging sign for the coming year. And then on the medical front, Omicron cases have peaked and now they're declining. And while we're not out of the woods there's less medical related market risks. And then housing and home buyer demand also remains strong, even with low inventory and rising prices. So all good news there. We always like to let you know what we're going to be watching in the coming months. Fixed income, the bond market, had a bumpy start to the year due to rising interest rates. And while this was not a huge surprise to us, we will continue to watch this as part of the market. Washington news also adds another degree of uncertainty to market reactions, and we're going to keep our eyes on Biden's Build Back Better Act that he has proposed. And internationally, record amounts of money have flowed into global equities. So we're watching investment opportunities worldwide as well. So back to the Olympics and the point I made earlier, one lesson we can take from these athletes is that they think long term. They spend years working toward a longer term goal of competing on the Olympic stage. And we'd like to remind our clients to stay focused on the long term as investors. That's what investors do. And even when there are some temporary downhill market slopes, they think beyond the next day or the next month or the next even sometimes year. They're thinking out further. Even if you're going to retire soon, you're likely not going to take all of your money out on day one of retirement. So think about that long-term time horizon. Everybody's a little bit different, but that's our outlook for this month. And as always, we're happy to answer any questions on this update or other market news. But if you specifically are questioning whether you'd like to take more or even less risk within your investment portfolio or within your employer-sponsored retirement account, we have an assessment we'd encourage you to take, which will help us make sure your investments are aligned with your needs and with your expectations. So for access to this assessment, please email Crystal@everthrivefinancial.com with the phrase risk assessment in the subject line, and she will send you a personalized link. Once we receive your results, we'll reach out to you with next steps. So we'll be back with more next month. But until then, we're going to be watching the markets closely. We're going to keep an open mind about future outcomes to the upside or to the downside. And be sure to keep us posted if you have any questions for our team.